From Kampala to the world, this is Business Now, your gateway to East Africa's evolving business world, brought to you by Absa Bank Uganda under the Joga 2025 campaign, empowering bold financial moves with the tailored loans for education, mobility and enterprise. With school bridge loans of up to 500 million, car loans of up to 600 million, and SME lending of up to 200 million shillings, and salary loans of up to 300 million shillings, with flexible terms of up to 84 months, repayment holidays and enticing cash offers. Joga 2025 is your partner in progress. And in this edition of Business Now, can Uganda's railway system get back on track? We speak exclusively to the Managing Director of Uganda Railways on the multi-billion shillings effort to revive locomotives and passenger services. And in the fields of agriculture, why are coffee prices falling and how can farmers adapt? We also bring you insights from a grower and a market analyst, Martin Lukwago. Plus, in Take Now, a spotlight on how smart logistics tracking is reshaping supply chains across Africa. And later, we decode the latest currency swings and stock market movements in our weekly market wrap. So stay with us. This is Business Now.
We need about 30 locomotives like Kenya, like Tanzania, and currently we only have 2. We are going also to open our trains from Tororo up to Guru. So we are expanding.
Our focus should be the primary production. Focus on production. That is a constant and still remains a constant for every economic activity you are into.
Trackers are very important, for example, mostly for business owners.
Let's take a look at the top business stories making headlines this week. And Dangote's ambitious push to end Africa's fertilizer imports. Nigerian billionaire Aliko Dangote is spearheading a massive expansion of his $2.5 billion fertilizer complex near Lagos. The plan is to double production from 3 million tons to more than 6 million tons within 40 months, making Africa self-sufficient in urea, cutting foreign exchange pressure, and reducing dependency on imports. Watch closely for infrastructure bottlenecks, port capacity challenges, and the planned IPO of the fertilizer plant on the Nigerian Stock Exchange later this year. And in the global markets, there are at crossroads, trade deals, tariffs, and take stocks. Markets remain volatile amid optimism over a US-China rare earth trade agreement, which propelled the S&P 500 and NASDAQ to record highs. But ongoing risks such as potential US tariffs on EU auto exports, geopolitical tensions, and the US fiscal bill persist. In this environment, investors are also eyeing earnings from Constellation Brands, Progress Software, Tesla deliveries, and other quarterly reports. And in our last business story, Lobito Corridor Railway advances, and this is in Africa. Link for copper and agri-exports financing talks are accelerating for the Lobito Corridor, a 530-kilometer railway project connecting Zambia's copper belt in the Angolan coast. Slated to begin in Q3 2026, the corridor aims to drive exports of copper and agriculture goods with backing from the US, the European Union, and the potential $500 million from the World Bank loan. And the upcoming week will reveal critical funding commitments and potential multilateral agreements. Welcome to Business Now. We start off with an exclusive with Uganda Railways in our first segment, and we sit down with Benon Kajuna, the Managing Director of Uganda Railways Corporation, who shares pivotal updates on key infrastructure developments. He outlines the 100 billion shillings Africa Development Bank revival, plans to procure 10 locomotives and 100 wagons, automated level crossings and park and ride facilities for over 190,000 daily passengers. However, the MD emphasizes that even more investment, potentially billions of shillings, is needed to fully restore passenger and locomotive services, especially given aging rolling stock and outstanding liabilities.
The government of Uganda is actually doing a lot to transform and revive the operations of railways. First of all, Uganda Railways Corporation is established by Act of Parliament of 1992, which gives the mandate to construct, operate and maintain the railway services both in Uganda and outside Uganda. So one of the areas we are looking at to transform the railway is the rehabilitation of the rail line. The government of Uganda has put in money, about $50 million, to rehabilitate the MGR from Marava up to Mukono. We have also got financing from a Spanish loan, and we have rehabilitated MGR from Mukono up to Kampala. And this one has been a total transformation of the rail line from steel sleepers to concrete sleepers. Also be aware that the government of Uganda, we got a grant financing from the European Union. They have constructed the Guru Logistics Hub, and this hub is meant to consolidate the cargo going to South Sudan, going to northern Uganda, and also going to DRC. So the cargo will be consolidated at the Guru Logistics Hub. And once the rehabilitation reaches Guru of the MGR, then we shall be able to receive both imports and also exports. As I talk now, we don't have enough locomotives. We have only 2 working locomotives. The government is coming in to give us money to procure 10 new locomotives. And they have given us about $298 million, African Development Bank, to help build capacity of URC. And we are building capacity of URC in 3 areas. In terms of the motive power, that's the locomotives and rolling stock. In terms of the permanent way, that's where the railroad, and also in terms of human capacity. So the funds will be able to do the track rehabilitation. We are going to do rolling stock machinery and also to procure marine services. It is also going to handle climate change and resilience building. And we're also going to handle trade facilitation and institutional support for URC. Skills development is very, very important for us. And also, we shall also handle gender and social infrastructure. And above all, as we do the rehabilitation, we shall be able to support the project and be able to compensate people who had actually constructed some houses or some facilities along the rail line.
But are there areas in the budget that are directly, in the next financial budget, that are directly addressing the challenges?
Oh, yes. As I talk, the government of Uganda has given us money to rehabilitate the Tororo-Guru railway line. They have given us meager resources, about 5 billion for next financial year. And we are saying that money may not be enough for us, really. And we are continuing to engage with the government. We are working with also other development partners, the European Union, the French Development Agency. We want to set up a passenger service from Bujuko to Kampala, Kampala connecting to Port Bell, and also Kampala connecting to Jinja. Now, we have already got a consultancy. They are doing a feasibility study and a preliminary design for us to establish that service. We need about 30 locomotives, like Kenya, like Tanzania, and currently we only have 2. Now, we are operating our trains from Maraba up to Kampala. We are going also to open our trains from Tororo up to Guru. So we are expanding. So the money we are getting from ADB, we are likely to get new locomotives after 3 years, 2 to 3 years. Because we have to go to the factory, make order, they manufacture new ones, because the government buys new ones. So we are engaging with autoports to see if we can be able to get locomotives leased to us for the period we are waiting to get new ones.
Speak about how it will, reduce traffic and also,
yes. Yes, thank you very much for that question. Yes, the construction of SGR in Uganda is going to be a game changer for economy, and Uganda in particular. This is a 2.7 billion euros, and this is a project which is going to construct 272 kilometers from Maraba to Kampala. It will take about four years. It is a huge project which is going to electrify the railway system. The railway system for Uganda is going to be electrified, and we anticipate to move about 20 million tons of cargo once it is actually constructed. And this is going to reduce cost of doing business in Uganda drastically, because now it will be taking us 2 days for goods to move from Mombasa up to Kampala. It means all the goods now will actually shift from road up to rail. And the cost of doing business in Uganda will actually be good. And it will also save the people from moving from here to Mombasa to look for their goods. The environmental and climate change, electric railway is environmental friendly. So climate resilience will be supported once this project is actually constructed. Okay. SGR will be 100% electric, and this is the way it was designed. The initial cost may be high because you have to buy a lot of things because it's electric, but the subsequent maintenance costs will drastically reduce. Will Ugandans ever see the SGR? Hey, the SGR. Do you believe it? It's true. It's true now, it's a fact. The contract was signed last year. The president launched the SGR last year, you are aware. We have paid advance payment to the contractor. So it's a true story. It's a true story, really. What are you doing to make Ugandans appreciate Uganda Railways? Yes. Do you believe Ugandans appreciate Uganda Railways? We are working with the MTN to make sure that we brand our coaches, to make sure that they can install Wi-Fi on our coaches, so that when we are moving in our coaches, you are able to access the Wi-Fi. Also to make sure that we have the e-cards, we are able to pay using the e-ticket, mobile money, whichever. So we also working with them. So soon, actually by next month, July, the service we are actually offering now from Kampala up to Mukono we shall be using e-ticketing, we shall be paying using mobile money, we shall be having Wi-Fi. We are going to brand our coaches with MTN and the URC logos. Everything is good. In the project which I've talked about, we are going to buy diesel multiple units, DMUs, and these are very modern coaches where passengers will be moving from here up to Mukono. We are also going to start a passenger service for tourists for weekend from here to Jinja on a Friday. You go to Jinja, it comes back on Saturday, it goes back on Sunday. So you can decide to go on a Friday in Jinja and then come back over the weekend on Sunday.
And turning to agriculture, our guest and will be from the coffee sector, and we examine the latest trends in the coffee market. After interviewing a local farmer and a financial analyst, we unpack why coffee prices are falling and what farmers must do to stay afloat. We explore hedging strategies, diversification, value addition, and the role of digital platforms. Now, practical tips and expert insights help farmers safeguard their livelihoods.
So whatever we see now is a good plus. There are bad pluses and good pluses. This is a good plus. Has it come down? Yes, it's come off to levels of our FAQ right now is about 12,500. Okay, between 12,000 and maybe 13,000. Also depends on how you've actually looked after your coffee. All these coffee exporters can tell you. And you can get a lot more information from them. Will the price go back up? Yes, potentially can. What are the drivers that have led to the coffee prices coming off? Yes, number one, we know it's Brazil. But we should also have empathy for what those guys are going through. I mean, they had frost. You don't have frost here in Uganda, but if you've been any of the outside countries and you have frost, everything like goes flat. So you can imagine you've planted your hectares of coffee and frost comes and wipes it out. It's a bad experience. Then they also hit around the same time or right after with this hot season. There the heat hits them or hammers them so bad, and as in the plants, and they dry. You don't want to see that. Now for them to have recovered in 1.5 or 2 years is a miracle. Let them enjoy, it's their time. Have the prices here come off all the way back to the 8,000? No. So we should also be happy and thankful to God for what we have. Can they drop further? Yes, they can. Our focus should be the primary production. Focus on production. That is a constant and still remains a constant for every economic activity you are into. You went in for production, focus on production. People need to understand why they are going into something. Don't do things because other people are doing it. Number one. Number two, run a financial model, run a projection of what you are going to do. And I'll tell you, I seem to be trying to recap on the same things, but I have reason why I am saying all this. I'll tell you. Previously, we had done up to 13 acres of coffee. Yeah? This is a deliberate decision. The season before the last, we planted 10 acres. 10 acres, that is 4,500 seedlings. Out of the 10 acres, we are doing the coffee in Nakaseke, Butalangu. That season was bad. The rains were just not enough. Furthermore, the rains in this last season were also not good. Out of the 4,500 seedlings, we lost and only retained about 310. That was a very painful experience. I can assure you, from the time we started preparing the ground up to when we got our hands off the crop, that now let's wait for the rains to just help us look after the crop, we had spent up to about 17 million. Because you couldn't even know whether the rains are going to be enough or not. We said, let's focus on a valley dam. So we constructed the valley dam. We were waiting for it to get filled. One day, it will get filled. So there's the objectivity, there's the financial projection that you run, and there's having that maintained thick skin in what you're doing. It's not rosy at all, but you have to be focused. So I'll tell you, do we have any technical assistance we're getting from government? That doesn't exist. So like many value chains in the agriculture sector, many farmers are running things on their own. But there are areas where government has put focus, and that's on value addition. Now, I may like it or I don't like it. That's immaterial for now. I just know that their focus is on value addition. Should I play anywhere within that space? I should. So we, as a team, focused on value addition of our own crop. Thank God we had started earlier, so we do some production.
And in Take Now, we talk logistics tracking because the spotlight now is on innovative logistics and how tracking is helping. We have a farm shaking up the sector. Learn how real-time tracking of goods gives businesses transparency, reduces losses, and optimizes routes and builds customer trust. You can join us as industry leaders discuss the intelligent logistics platform that we know of here in Uganda.
Trackers are very important. For example, mostly for business owners. Now, like the money lending business, it's risky for you to give money against a car when you don't know where it is. A client can come and borrow money from you and they run away with the car. So it is of importance for you to put a tracker so that you know where a client is. Then we have other things we can use on the app to stop the car. For example, if someone came and borrowed 100 million and they want to go and sell the car to Congo, you can stop it at the border and actually stop the engine. So it's very important for people to use tracking services because it helps you to monitor where that car is. Remember, it is security. There is your money. So you have to follow and know where that car is. You have to know where the client is. The app can actually even monitor when someone is over speeding, when the car has an engine breakdown. So it helps you to track because a business is risky. It's hard for you to just give someone money and then you leave your collateral to go like that. And then for individuals, it is for your personal security. What if they come and break in and steal your car? A tracker will help you to monitor where that car is. So that's how it's important. So for the companies that we are tracking for, the financial companies that we are tracking for, that are giving car logbook financing, we bill them monthly. Because they don't own those trackers, they just hire them from us. So we go and install in their clients' cars. When a client finishes money, we go and remove the trackers from those cars and we bring them back to our company. Those ones pay monthly. We have a monthly quotation according to the number of cars you'll be paying for each car. We create for you a platform we create for you an account on the platform, then we give you access to your cars. We create for you the backup, because we put backup and main tracker. So we give you the logins and then you manage it yourself for those companies that we are doing tracking for, and then they pay us monthly. When the client finishes the money, for us we bill them monthly. When the client finishes the money, we uninstall the tracker. But then for individual trackers, you buy the tracker and own it yourself. Create for you a platform and you have it on your phone. So this one you buy at once and you own it for yourself. Some of the challenges is people actually remove those trackers. There are people that know where we put them, because it's general knowledge if you're in electronical things and mechanical. So some of them remove, but remember, it is our cost in case, because for us the companies we are working for, if they remove a tracker, it is our cost. We have to find that car because we have a contract with you. So one of the challenges is that, but now the good thing, we use magnetic and wired, so it's hard for someone to remove both trackers. Usually clients think it's one tracker and then they remove one, so that is what is saving us. But some clients actually go ahead and remove those trackers, and then it's costly to us. And maybe the other challenge is we use local SIM cards in those trackers. So sometimes when someone goes to a remote area, it's hard to keep network. You have sometimes network goes off, so you can't really get the exact location, and then battery can run out. Sometimes you need a technician needs to go to the field and actually reboot the car, reboot the tracker for it to work. Yeah, those are some of the challenges that we are facing, but we are looking forward to moving on from the local SIM cards.
In our Forex market update, the Uganda shilling posted mild losses against the US dollar on Monday, with the US dollar Uganda shilling pair exchange rate rising to 3,595, going up 0.05% from the previous session. And despite the day's dip, the shilling remains firm on broader terms, up 1.21% over the past month and 3.23% stronger year-on-year, supported by healthy inflows and tight monetary conditions. Our analysts note that continued remittance strength and disciplined fiscal policy are helping to anchor the local currency amid global volatility. Let's talk equity market wrap now. Uganda's stock market closed Monday slightly higher, with the benchmark all-share index at the Uganda Securities Exchange edging up to 1,287 points from 1,286 in the previous session. However, the local company index was down 337.97, reflecting muted activity among locally listed firms. That brings us to the close of this edition of Business Now, brought to you by Absa Bank Uganda under the JOGA 2025 campaign, empowering bold financial moves with tailored loans for education, mobility and enterprise, with school bridge loans of up to 500 million shillings and then 600 million shillings into your SME lending and 200 million shillings and salary loans of up to 300 million shillings, all with flexible terms of up to 84 months. Repayment holidays and enticing cashback offers. JOGA 2025 is your partner in progress. I'm Malcolm Sime. Let's keep the conversation going. Connect with me on X at Malcolm Sime or at NTV Uganda. If you missed any part of the show or you want to watch it again, catch the full episode on NTV Uganda YouTube channel, and don't miss the repeat broadcast this Friday afternoon right here on NTV Uganda. Until then, next time, keep building, keep growing, and good night.